It kind of feels like everyone has been bracing for an Airbnb crash for a while now. And I'll say there are definitely good reasons for existing hosts to feel panicked and for first timers to be anxious about starting at the wrong moment. That said, there are still people like us who are starting Airbnbs and doing well. So, with all the uncertainty and things like that, how do people who want to get started make sense of the noise and mitigate risks? Welcome back, folks. I'm Mikey. I'm one half of Coupled Investments. So Travis and I have been in real estate for 10 years now at various established real estate companies, and we also invest on our own. We want to show beginners the strategies and tools we've successfully used across diverse real estate markets in the US and now also Puerto Rico, so you can build wealth beyond borders too. Today, I'll share a perspective on what I think is happening in the Airbnb market based on some data, and I'll talk about how anyone who wants to get into Airbnb can do so. I'll share some of the tools that we're using in our Airbnb management and the other hosts use to increase their resiliency in this market as we go along. I'll also break down the process step by step for anyone who wants to get started with Airbnbs. I'll start with, how to find Airbnbs and evaluate their profit potential, all the way to actually setting up the listing on short-term platforms, including some tips on how to make sure your listing ranks well. Even if you feel like you're stuck on the sidelines because of high interest rates and competitive markets, times like this can be a great opportunity to learn as much as you can and lay that groundwork so when an opportunity does come up, you're ready. First, let's talk about the decline in demand we're seeing in Airbnb. In the US, we're seeing fewer guests booking Airbnbs, and when they do, they're not staying as long. That means occupancy is going down. This is putting a lot of Airbnb hosts in a tough spot, especially those who bought homes just to rent them out in low-performing markets. Many of these hosts are seeing lower revenue and are sometimes having to sell their properties, even at a loss. In some places like Florida, the housing market has become flooded with Airbnb homes being put up for sale. Now, on top of declining demand, there's the issue of costs. Airbnb stays used to be a cheaper option, but now sometimes guests feel like with the added fees, like cleaning charges, they can be more expensive than hotels. So guests are noticing and they're wondering, why stay in an Airbnb if I can pay less for a hotel and get better service? It's making people question whether Airbnb is still the best value. And that brings us to a third potential issue: quality control. So unlike hotels, which have a standard level of service, Airbnb, as you know, can be really hit or miss. I know I've had my share of never again instances with Airbnb, and a lot of people are starting to feel that way. So it makes them hesitant to book. Another issue that Airbnb markets are facing includes the community perception and the impact of Airbnb on neighborhoods. And unfortunately, there are operators who don't follow the rules and provide substandard accommodations. With those dynamics, cities are taking action. So we've seen it in places like New York, where they're banning or limiting Airbnbs, and that's leading to fewer rentals and slower growth for Airbnb in those markets. The last thing that raises concern for folks is the broader economic context. When interest rates start to rise again, that will be a big financial hurdle for a lot of hosts. Higher rates mean it can cost more to hold a mortgage on an Airbnb property, which is going to squeeze host profits even further, especially if they're already dealing with fewer bookings, lower occupancy. This is going to make it a lot harder for those hosts to break even. So those are some of the risks that Airbnb markets are facing now that will likely continue into 2025. Now, you will find some exceptions even with these macro trends in local markets. Like when I check market trend data for our market in Puerto Rico, I'm still seeing strong growth trends over the last couple of years. But of course, past performance is not indicative of future gains. So I look for more than just market growth when deciding where and what type of Airbnb to start. And we'll get into that in a bit. Just a few more thoughts on this. I think what we're seeing is the market maturing, shifting towards more regulation and more stability. And that should be good news for most operators who have the right approach and the right expectations for starting an Airbnb. In my perspective, Airbnb will continue to exist because it solves a problem for customers that traditional hotels don't solve. Families traveling together, digital nomads seeking midterm stays, there's still a huge market to play in. There are going to be hosts that are going to keep making money in this market. Now, let's talk about how you can get started. Think about Airbnb as a type of real estate product. When you want to sell a product, you need to know the market and the type of customer you're going to sell to. An actionable step you can take that doesn't require upfront money is to analyze the market. What location do you want to invest in? Who are the customers you want to serve? I think these are questions that you can answer without spending any money. Let's say you live in New York, but you love visiting Florida. You want to have a place in Miami, Florida, where you can live and sometimes rent out as an Airbnb when you're back home. What would you need to do to learn about that market to inform your decision? Here's where you could start. When you have a market in mind to explore, start by getting to know the rules and regulations. Does the market even allow Airbnbs? What are the requirements for getting one started? Figure out if there are rules regarding how many Airbnbs you can have, whether there are limits to the number of days that you can host, or whether you have to be an owner occupant, meaning you have to live in the property. There are plenty of cities enacting these types of rules. Places like New York City and Washington, D.C., and there are some others, have these type of occupancy rules. These rules are usually implemented and enforced at the municipal level, even though they might be following state standards. So you should get to know these rules and regulations. Here's a shortcut I would not take. Just because a market is more regulated doesn't mean it's not financially worth it. So don't give up if you see that rules and regulations are in place. Move on to the next step, which is where you start to look at how well short-term rentals are performing in that market. Here are some things that I would take a look at. How is the supply of Airbnbs? What is the total supply, and what is the supply by unit type? What is the overall demand, which can be measured by the occupancy rate? Are there a ton of Airbnbs that are vacant most of the time, or are they 70% or more occupied? What does that occupancy look like over time? The other thing you want to look at is the average daily rate. What is it for the market? Because this is going to be a measure of what people are willing to pay for an Airbnb in that market. I wouldn't just look at the average daily rate, the ADR for today. I would look back and see whether it's going up over time. All of these inputs will give you more insight into the supply and demand. This is key because if there are too many rentals in a market and not enough guests, that means that you could struggle to rent your unit. There are plenty of analytics platforms like the one we use that other short-term rental owners use to evaluate the performance of short-term rentals across markets. The platform we use pulls data from a couple of the major STR platforms, including Booking, VRBO, and Airbnb. It's been a great source for market research because you can look at pricing, revenue, occupancy trends over time, and you can get down to a really detailed level to zip codes and even property level. You can actually go in and analyze potential competitor properties and see what features and amenities they're offering. So when you're looking at the market data, you want to be aware of any downward trends like declining occupancy and declining average daily rates, especially with some of the current market changes going on. The other question you should answer for yourself is, who is your target customer? You can use the supply data to help answer that question. You want to find where there's a potential gap in your market. For example, is there an oversupply of studios and not enough large houses to accommodate families or groups traveling together? That could be a potential niche. If you can identify the customer niche, then you can play in the part of the market that is in higher demand. Let's step back and talk about another key aspect that you need to understand, which is what are the dynamics of the real estate market that you're going to be purchasing the property in? If, say, you're looking for big houses to target families as your customer type, what is the average price per square foot of those houses in the market? This, combined with the mortgage, if you're financing the property, is going to impact your expenses and ultimately your profit, which I'll explain how to calculate later. Once you've identified your customer type and analyzed your market, the next step that you'll need to take to actually secure a property is to get a loan pre-approval. This is also free to do. The pre-approval is important because it will determine what price range you can realistically afford to buy a property. So before you go too far down any rabbit hole, you're going to want to get this pre-approval from a lender, which will tell you the upper limit of what a bank will actually lend to you. And it will help you estimate how much you can expect to pay for your mortgage, which is an expense that you need to consider upfront. It's going to help you decide if the Airbnb is worth it. Typically, to get a pre-approval, the lender will ask you for financial documents such as your W-2, pay stubs, bank statements, credit report, and a couple of others. If you have all of your documents ready, a good lender can usually get you pre-approved pretty quickly. The thing about getting a pre-approval too is that it doesn't cost you anything and it doesn't obligate you to take out a loan. It really just gives you more information so you can know your options. By the way, sometimes sellers are going to require a pre-approval in order for you to submit an offer on a property regardless. As a realtor and investor, I've rarely seen or done a transaction where that wasn't the case, especially in competitive markets. This is why if you're working with a realtor, trying to work with one of the first things they will ask is whether you've been pre-qualified or pre-approved, because one, it helps them narrow down the property search to what you could reasonably afford. And two, you're going to need it to have your offer taken seriously by the sellers. Speaking of realtors, you're going to want to identify one to help you with your research. I've had my real estate license in 3 states on the East Coast where we've bought investment properties or homes ourselves or helped others. And Having a good realtor who understands investment properties is really important. Even if you're investing in a local market that you think you know, realtors have access to information and data that you don't necessarily have. You're going to want to look for realtors who make it their business to know if a property is overvalued. You want to look for realtors who know their markets really well. Should know if and when a property is potentially overvalued. They should be paying attention to market trends, like if a sub-neighborhood is growing in population or shrinking. They should know how much property managers cost in the area. These are signs that someone is really plugged in and they know what investors look for and they know what investors need to make an informed decision. A good realtor is also useful because they can connect you to professionals that you might need in the operation of your Airbnb, like handymen, property managers, cleaners, and other professionals. So far, we've talked about 1, identifying your target location and customer, 2, evaluating the market, and 3, getting your pre-approval. The next step is to run the numbers on properties that you are interested in. If you're going to go through all of this effort, I think you're going to want to know the likelihood that you will net a profit after all of your expenses are paid on your property. Okay, so that was a lot of information at once. So let's call that part 1. And in part 2, in the next video, I'll continue with the financial analysis, show you a couple of important rates of return that you should know, as well as getting into the actual setting up and operations of your Airbnb. Before you go, don't forget to subscribe to our channel and join the newsletter if you like resources like this. It's where we share a lot more tips and tools with just our subscribers.